And now we're excited to hear from Congressman Foster. Congressman.
Well, hello. Hey, Chuck, how are you doing? I don't know, how much of an introduction do I need in this operation here? Should I just proceed? I will
jump in. Have about 30 minutes with you, Congressman.
Okay. Well, I have to start out by just, Chuck has some significant amount to do with the fact that about 17, 18 years ago, I fell prey to the family's recessive gene for adult onset political activism. At the time, he was organizing a group. He and Bill Gates Sr., who passed away actually not long ago, but he and Chuck were, well, you're in the process of writing a book, which I think I have right here, right there, this book.
All right.
Yes, but also leading a group called Responsible Wealth, who are people that were going to pay the estate tax and felt that they should. And so I'm not sure why, at the time I was just a scientist. I've been in the midst of spending 25 years working at Fermi National Accelerator Lab, building giant accelerators and smashing protons and antiprotons together. But at some point, I was reading the Sunday Times and read about that group, and and there's something about the repeal of the estate tax that just pushed my hot button. I'm not sure. Part of it may have been that I grew up with a group of friends, a couple of which knew that they were going to inherit a lot of money, and frankly didn't make as much of their lives as they should. And the other part is just general, how corrosive it is when people are put at such advantages or disadvantages for completely random reasons. And so I thought it was important that my children be exposed to this. And so, the Responsible Wealth went and knocked doors in Congress once every year. And so I would drag my son and daughter to that. And go into the representatives and senators that would talk to us and, make the simple argument that, look, we're in the, we're going to pay the estate tax and we should, and which sort of, makes their head snap back, because that's not the typical lobbying request that they get. It's generally, banks that come into their offices with some complicated argument why they should be allowed to lever up and transfer a lot of risk onto the public, and all these complicated self-interested arguments. And so it's one of the really one of the really good things that that Chuck and I think many of you involved in Patriotic Millionaires have done. I think, well, I'll say a couple of things and then happily just open it up to questions. I've spent, well, I should, I guess, finish my introduction. I didn't inherit my wealth. I started, my little brother and I started our company with $500 from my parents, and started in our mom and dad's basement. And then after a little while, we got kicked out of the basement because we were making too big a mess. And so then we moved up to my bedroom, and the company, we had the bright idea of using the newly invented microprocessor to make to control theater lights. And so the company now is, quite successful. It has about 1,300 employees and makes about 70% of all the theater lighting equipment in the US. And so I ran it for about 10 years and then went back to my first love, which was physics, and spent most of my time being a high energy particle physicist. So I've just followed this sort of natural path from, theatrical stage lighting to high energy particle physics to the US Congress. And so I'm just another one of those. But, but the issue with what do we do about the buildup of wealth at the top in our country, is one that stayed with me. And frankly, I've spent a lot of my career just trying to figure out why we've been losing that battle, how in a democracy you can lose it. And so I've tried various strategies, and maybe numbers that you can quote to people, or narratives. One of the painful things about moving from science to politics is that you realize so much of politics is driven by narratives and anecdotes rather than statistics. And which it took me, I'm still not over it, frankly. But so I'll just, at least those of you who just are content to look at the statistics, one of the most useful ones I found is household net worth. because one of the counter narratives that we're fighting all the time is, oh my gosh, Democrats are spending the country into debt. We don't have enough money. It's $20 trillion, blah, blah, blah. And so, okay, but what is that? What do you compare that to? And one of the things you compare it to is, what's the net worth of America? And so the net worth of America, at least prior to the COVID crisis, was around $120 trillion. And that is up from about 60 trillion in the depths of the financial crisis. So since the Obama recovery, the net worth of the United States has gone up by about $60 trillion. And it's currently around 120. So if you have $120 trillion and you owe $20 trillion, you're not facing a financial cliff. But the Republicans were very successful in 2010, when, among other things, I lost my seat in Congress in the Tea Party wave, by just telling people that, well, since you are scared of your debt, you must be scared. You should be scared for the government. And that caused us to forego investments that we really should have made in that time period. Investments in education, scientific research, and just, the human condition in our country. And these are some of the highest return on investments that you can make. And one of the narratives that I like to use, or ways to describe what's going on, is sort of use the differential description of this and say, okay, what happens if you give a working class person an extra dollar, and what happens if you give a wealthy person an extra dollar? Because it goes very differently. If you give a wealthy person an extra dollar, it's sort of hard to find that data. The best, I don't know, maybe you know of some better write-up on this, but one of the best things I found was, there's a group that, I can't even remember their name, the Camp Gemini Wealth Report, which is basically a description. It's a publication for wealth managers to try to get their claws into the money of rich people. But it gives, on a region by region basis, a description of where rich people put their money. So in North America, if you give a rich person an extra dollar, what happens is about 1/3 of it flies straight offshore. That because the advice from your money manager is to, is to basically diversify, which is rational self-interest and probably good advice. But it's not a recipe for creating jobs in America to give money to a wealthy person where 1/3 of that money goes straight offshore. And then another 1/3 of that money gets invested in what they call passion investments. So these are things like yachts and jewelry and things that you own, not to have any return on investment. Not as a financial investment, just because you think it'd be cool to own this stuff. And those are not very socially productive. And only 1/3 of the money is actually that you turn over to your money manager then is productively invested in the United States. So that's one of the reasons why this narrative of just give the rich more money and it will trickle down doesn't work, because 2/3 of it doesn't get productively reinvested. And then that should be contrasted by what happens if you give a working class person money, and it's much more likely to be invested or even spent locally in the local economy and recirculate in the local economy, creating, income and wealth for everyone before it disappears. Is this yes?
Oh, I just wanted to jump in here because I think one of the best ways, it sort of doesn't make sense when people, if you're not into economics and tax and all this, to hear about money circulating back into the economy and why, if rich people have all this money, why can't it circulate? And Ben Cohen of Ben and Jerry's, I think, said it best one time. He said, look, there's only so much chunky monkey one rich guy can eat, And so, we want everybody to have enough for a scoop. And when you have an economy that's 70% consumer demand, the best thing you could possibly do to maintain your consumer demand level is to make sure that your consumers have money to spend. So the Patriotic Millionaires, we spend a huge amount of time talking about taxes, but we also spend quite a bit of time talking about the minimum wage. So, maybe next year we'll come back and do our pay the people presentation for your constituents, Congressman.
Yeah, well, the other really interesting new tool to try to deal with the maldistribution of wealth is the universal basic income. I have been startled at how quickly, well, how much traction Yang got, and how quickly that was incorporated with bipartisan support into the emergency bailout, coronavirus bailout. We said, yep, everyone gets a check, boom. There was a cutoff somewhere around $100,000, but it was pretty much money straight from the government, and there was not a lot of argument about that, at least in an emergency situation. And now the challenge is to tell people, well, guess what? We're facing a long-standing emergency with the maldistribution of wealth in our country. There's a really interesting, I think the first large-scale experiment on that is taking place in Korea. And I just saw recently in the last few days, I think it was a short 5-minute video on this, but it was quite impressive, and is being adopted regionally. It's, I think, on the order of like $250 a month. So it's not enough to live on, but a real help if you just have a gig job. And the politician that is pushing this regionally is in very good shape to win the next election nationally. And so this may be, and it's in a place that's hit very hard with automation, an area of Korea where they're being clobbered that way. And so I think that is, that's a new player in this. That the argument that robots are taking everyone's job has traction on both sides of the aisle, and then it's obvious to everyone that everyone who thinks about it for a while, that as humans become more and more incapable of competing with machines for anything having to do with the production and distribution of material goods, that you're going to have basically the pure free market economy breaks. There's this old science fiction movie plot where there's one guy who owns the robot factory, and no one can compete in any job with the robots that built by the robots in his factory. And so the problem is the free market economy delivers all wealth to that one person, and then the economy stops. It's from a circuit designer's point of view, you don't have a complete circuit. The electricity can't just flow into one node of a circuit and stop. It just, the current ceases. And so that is something that, that's something that I think people are sensing more and more. And, you can argue about whether that one person at the top is Bezos or Bill Gates or Elon Musk or whoever. But automation is such a threat to the ordinary ways that people take pride in their work, that something's got to be done. And I think that's one of the things that will make this an easier argument than it's been in the past.
And we have some questions, and we've got about 15 minutes together. So I'd love to answer some questions. And why don't y'all just, whoever wants to take it, just give me a signal. And so one of our attendees has asked, if everyone agrees we need to tax the rich, why is it so hard to get the government to actually do it? Congressman should kick that one.
A big part of it is that
in Washington.
Yeah, well, look, at a big part of it is that one party has been pretty well captured by moneyed interest, and the citizen. It's not just Citizens United and corporate money. It is billionaires. Okay, that's when we have to face that. It is that we're going to have to do something to just limit the amount that one single person who inherits or earns a bunch of money can spend to influence elections. And so I think, the corporations are low-hanging fruit, at least in terms of the polling, and something that you can realistically do. And it's a tough thing because you're very near a slippery slope to limiting freedom of speech. If you're someone who believes in a clean environment, and if some billionaire wants to spend a lot of his money convincing the public that a clean environment is worth investing in, are we really going to tell him, no, you cannot do that with his money? But then if we say, okay, you can do it if it's the environment, but you can't do it if you're arguing to repeal the estate tax, then it's tough. And so there is a very dangerous cliff that I am more comfortable staying 2 steps away from. One of the most tremendous developments of the last 5 years is that we're seeing just a tremendous outpouring of online money. That if you look at a lot of the newly elected members of Congress, they don't care that much about the corporate money because it's a tiny fraction of the money that they raise online. And I hope that persists, at least at the congressional level. because that's the best solution to this, that everyone who has a certain amount of wealth in their life should just, as a matter of civic duty, spend part of that to support candidates they agree with. And that would make, it'll go a long way. So that's part of it. The other part of it is just the stickiness of the narrative that our country was born with, that if hard work equals an automatic route to wealth. So it used to be, at the time of the founding fathers, probably 75%, 80% of the US were subsistence farmers. And the government gave away free land to anyone who wanted it. And so free land plus hard work gave you a decent life on the scale that life was decent then. And that was the narrative that we internalized as a country. But over time that's changed because it's not just this gift of land. First off, you don't need land anymore. You need other things, like education, and other things are more valuable than land. I mean, I guess agriculture is down to about 1.5% of our economy. The other thing is that there's been a huge shift towards the source of corporate profits, particularly in the tech sector, away from innovation and towards just sort of rents from monopoly profits. And this is not to say that they're intrinsically evil. That probably the first digital monopoly that we're familiar with is maybe Microsoft Word, where what happened there is that no one wants to use a word processor that's incompatible with the one everyone else is using. It's a natural monopoly. And the other thing is the returns to scale of digital products. It cost Bill Gates Jr. $1 billion to make the first copy of Microsoft Word and almost nothing to make additional ones. The same thing happens with any purely digital product. And so this generates a huge tendency toward monopoly. And so, the right answer to that is simply to recognize it and at a minimum tax and perhaps limit the, basically break up these big naturally occurring monopolies.
And Congressman, we have a bunch of questions. So let me
okay, sure.
toss some of them out. Sorry about that. So let's see, we've got thoughts on the effect of gerrymandering on maintaining income inequality. Why don't we throw that one to Chuck?
Well, clearly, money is kind of having an impact on particular districts and kind of driving a gerrymandering process over the last couple decades. So I think that's clearly something that we're dealing with. So, I think these policies that we're talking about to make the tax system more fair are wildly popular. They're majority ideas, but we're kind of held hostage to a system where small minorities now control key precincts. And Congressman Foster used the word capture, which I think is the way to think about how certain districts have been captured.
I'll throw this one to Morris. Or Congressman, do you want to comment on that also?
Yeah, the other thing is the business of separate partisan primaries. That's one of the things, I think, one of the reasons that politics works so badly in our country is that there's no mechanism for anyone to get their 51% out of the middle. Everyone has to survive either a Democratic or Republican primary. And so that, puts extremists in. It also makes the primary elections very cheap to influence and to buy by moneyed interests. And so that if you had much higher participation in, the California system, for example, or the ranked choice system in Maine, I think you'll have much more participation by the entire spectrum of people in our electoral process and make it harder for it to be bought.
Great. So I've got one, Morris. I'm going to throw this one to you and Stephen. Why can't people just pay more in taxes? You're allowed to submit extra through the IRS.
Well, sure. I could send in more money if I wanted to. If it was just my own money I was worried about, we wouldn't need to be doing all this. I could just send in some money. But imagine, like, if you're running a country club You couldn't have a country club where everyone just sends in whatever they want. You have to have an annual meeting and agree on what the dues will be, and each person pay their fair share of the dues. Because if everyone sent in whatever they want to, you'd have a few freeloaders who didn't want to send in anything. And then the rest of the people in the middle would kind of be very resentful that they're paying their share while other people aren't. And they'd quit and join some other club. And if you can't run a country club that way, you can't run a country that way either.
Stephen, you're on mute. Stephen, you got to unmute yourself. There you go.
I've tried. You know, I'm not a high tech. I'm not a high tech guy. You know, that's one. I think the guy on Fox News' name is Stuart Barney. I think his name is, and that's his favorite question to ask we wealthy people who say we need to pay more taxes. Is, well, why don't you just write a bigger check? Well, that's the stupidest thing I've ever heard. It's an infantile question, something a 12-year-old would ask. I mean, because I tell people all the time, if I could write a check for 100% of my total wealth, first of all, my children would get nothing, and I personally would be okay with that. Because the salvation of America is more important than the economic well-being of even my own children. America is more important than that. But secondly, you know, it's just absurd to think that if I gave all my money, it wouldn't make any difference whatsoever. To even consider doing that implies one of two things. Either one, I'm stupid, which I'm not. And secondly, that I'm guilty. I feel guilty because I'm wealthy. I don't feel guilty. I'm tickled that I'm rich. And I worked hard for it. I took a lot of risk. But to assume that I'm guilty enough to give more money when all my other friends are not going to is the most absurd consideration I've ever heard.
Stephen does love being rich. It's kind of funny. I'll say this. There are 500,000 people in the United States of America who make incomes of $1 million a year or more. The cutoff for being a member of our group is $1 million of income or $5 million of wealth. So there are 500,000 people in the country with that income level. We have 200 members, you know, and so you just can't fix the problem with individual people. And most rich people don't want to do this. So it's not a matter, if we could get them to voluntarily do anything, then maybe we wouldn't be in this position. But Chuck has done a lot of study on their charitable giving. They give less money than everybody else too, as a percentage of their income. And they want all these accolades about doing it. You know, was it Jeff Bezos who gave away, you know, like some $100,000 to save the rainforest? And based on how much he makes, he gave away 3 minutes of his time to save the rainforest. And we're all expected to be grateful to him for it. Give me a break. All right, let's look at another question. So we've got, I hope with all my heart you are helping Vice President Biden in restructuring the tax plan he has proposed. I'm being told by couples making $400,000 a year that no way will they vote for the Biden plan because their taxes will go up. So I might kick this one to Morris, but I'll just start off by saying the Patriotic Millionaires, you can go on our website, patrioticmillionaires.org. We want to start raising taxes on people who have $1 million of income or $5 million of wealth, and we have no personal interest in taxing anyone below that. And, you know, there's a lot of unfairness in the tax code. One of the things we bring up right in the beginning is this differential between capital gains income and ordinary income. That would theoretically start for people who make less money than that if they happen to have some investments, but you could start that at $1 million or more. So as far as Biden's tax plan goes, it's a lot better than what we have now, but our group would start a little higher and lean on the billionaires more. Morris, you want to hit some of that too?
Sure, I agree with Erica. I'm here in my apartment on Park Avenue, New York City. And I can assure you, I know people who earn far more than $400,000 who will vote for Vice President Biden to be elected president. And I'd also point out that even if no one who makes more than $400,000 votes for him, he could still be elected in a huge landslide. There just aren't that many people who make over $400,000 a year.
Oh yeah, okay.
One other thing to say, a lot of the growth in income and wealth has gone to the top 1/10 of 1%. So those are people with incomes over 3 million, wealth over 25 million. And we should, before anybody else pays a nickel more in taxes, we should make sure that group is paying its fair share.
Yeah, I think one of my favorite quotes from Chuck is that if we have to have taxes at all, the best place to start is with dead billionaires. And
Yeah, we completely agree.
I vote for Chuck.
Vote for Chuck. All right, so tax arguments at the national level always seem to boil down to this. Democrats want to raise taxes on business, while Republicans want to cut taxes on business. Democrats want to raise taxes on the rich, while Republicans want to cut taxes on the rich. Both of these statements are true because a business is being taxed at the individual level as pass-through entities. Any thoughts on truly separating out the individual income tax rate from the business tax rate? Morris? Oh, you're muted.
Sorry, I muted myself. I mean, we do have to think of both businesses and individuals. Part of the problem with our system is that so much wealth is being accumulated in the few corporations. Think of companies like Amazon and Apple that are worth hundreds of billions and trillions of dollars. And so much of our wealth is being accumulated in those companies that are then owned by a fraction of the population of our country. And yeah, we have to address that.
Thoughts on changing income tax bracket. So the first $100,000 has a 0 tax rate and raising rates above $100,000, thus bolstering the consumption economy and making sure that the income to have a quality of life is more possible for low and middle income wage earners, and also support startup engineers. So I'll just clarify something from the presentation. One of the things that the Republican tax code did was it raised the standard deduction a fair amount. And so, as I said, that first, for a married couple, that first about $25,000 is just the government saying you need all of that to take care of your own stuff. And then after that, you can start putting some stuff into the national kitty. The income tax bracket, I think we wouldn't agree with that to start it at 100,000. It's okay for people to put in as they go up the thing. I guess our main criticism is that it stops at 37% and that it basically any income from 622,000 to infinity or 622 million, that's all taxed at the same rate. We think that is unbelievably stupid. It's like have another tax bracket, preferably at 50% or above, at $1 million, then another at 2 million, 5 million, 10 million, 15 million. Somebody who makes $600,000 a year does not particularly have anything in common with somebody who makes $5 million a year. So why is the $5 million person in the same tax bracket as the 622,000? Congressman, do you have any thoughts on that?
Well, I understand completely why Biden drew the line at 400, because he did not want to be accused of raising taxes on the middle class. And that was politically a line that I think everyone would agree is out of the middle class. And then the other question is how sharply you raise it, how progressive it is after that. And I think that's a question of what is politically possible. When I started my business back when I was a kid, I knew that the top marginal tax rate was like 90%. And so that if our company ever got big and successful, I would be paying 90% of my marginal dollar. And that did not stop us from staying up all night shipping the first products from our basement. And this is something that people should understand. And the other side of that coin is that I got at an incredibly cheap price a very good education from the state of Wisconsin, that for I think $2,500 a year, either a year or a semester, I got a pretty good college education. And so that used to be the deal, that you could work your way through college with a part-time job and escape without debt. And then the other side of the coin is that if you became successful, you had high tax rates. I think that is something that that almost everyone that I talk to under 30 just 100% buys into. So that time is on our side on this. I hope this is one of the issues like sort of gay rights, where if you look at the polling, there was just a demographic wave that swept through the electorate. And I think that, I think that the time has come, and I think there's a very good chance at the start of the Biden presidency to at least get a very good set of curves installed above 400,000, and probably a good political choice to concentrate on starting there.
So y'all, we hit our time, and we like to be efficient and end when we say so. It's 1:30. Any closing thoughts? Congressman Foster, thank you so much again for being with us. Morris, Stephen, Congressman, any closing thoughts?
I have one thing I want to say. I heard a very interesting statistic, and you got to understand, I'm in a red state in Georgia, and I read an article yesterday in a magazine that, coming from a very unusual source, talking about we are in a presidential election, and there's a lot of people that this individual said that say, should I take all my money out of the market right now for fear of Biden winning the election because of what will happen in the market? And this right-leaning magazine said, or this person that wrote it said, ironically, over the last 50 years, under a Democratic-controlled environment in Washington, the stock market went up 10.6%. Under Republicans, 4.8%. So we're afraid of the wrong monster.
He means per year.
Per year. Per year.
Congressman?
And that's because Democrats believe in returning money and putting money in the pockets of the middle class. You know, the real job creators, as any businessman knows, are customers, and customers come from the middle class. And that is the key for real economic growth.
So y'all, thanks again on behalf of the Patriotic Millionaires. We are just delighted to have been here. You can watch the show. We have 20 stops on the roadshow planned so far. Congressman Foster, you kicked us off, so I hope we did okay on our first run through our presentation. And y'all can go to taxtherich.com and learn more. And if you want to host one of these for a group of your friends and allies, we'd be happy to do one. Congressman, thank you so much for being with us. Thanks, everybody.
And thank you.